Hello traders, how's everybody doing? I'm just inviting everybody else to join me. Can you hear me? Hello, 1 2 1 2, testing. Hello? Yeah. So how's everybody doing? Hi Lee, how are you? Let's just wait a little bit for everybody to join us. The US session is about to open in 20 seconds or so. Let's see the volume, how the volume, what the volume brings, right? All right, so the US session just opened, and um, yeah. Hi Adam. Hi GD. Hi Hoy. I'm seeing some buying pressure in gold at the open. Let's have a look at equities. Equities are crashing at the moment. Hi, Sebastián Espinosa Posada. How are you, mate? Yeah, I'm seeing some buying pressure in gold. Let's have a look at gold at the open. Let's put on the 1 minute chart just to see. Really? 1 hour? No. No, it just opened. Just open. Hi Ibrahim. I don't know if I will be giving signals in the live stream. If we find something, we might trade it, but I don't know. Why don't we start with the US dollar, right? As always, the US dollar is super bullish at the moment. Let me put on the 1 hour chart. Yeah, I'll do the US dollar Japanese yen, of course. So this is my chart of the DXY on the 1 hour chart, on the 1 hour time frame. I'm sorry. And what I'm seeing right now. Hi, Quentin. How do I find my info for the market opening times? Well, the market opens at 9:30 New York time, mate. So just Google New York time right now. Yeah, so the US dollar, I'm sorry, I have a little bit of a sore throat, but I'm still here for you guys, so don't panic if if I cough or something. So the US dollar, after the FOMC meeting, right? We had a very bullish bar, a very bullish day, and yeah, and the thing is that do you guys know why the US dollar rallied during FOMC? If you know the answer, just type it on the chat, right? Well, the Fed announced that they were going to keep interest rates close to zero, and they were going to keep the pace of their asset purchasing program, right? Yeah, that's right, Godfred. But the thing about it is that they didn't say it explicitly, right? They didn't say explicitly that they were going to hike rates in the next meeting. But the language of the monetary policy statement was quite hawkish, right? So the thing about that is that I think that in this statement they say that they were going to use all their tools to fight rising inflation, right? And the tool that they have to fight rising inflation, of course, is hiking interest rates. That is very bullish, right, for the USD. And gold crashed. This is the hourly. Let's go to the 4-hour chart, right? Gold crashed because gold is a hedge against inflation, right? And well, inflation is already here, and this is the thing about monetary policy statements, right? You have to be very careful when trading those days or those announcements because, well, to me, this move to the downside is quite irrational. Why? Because inflation is already here, right? And the Fed hinting rate hike does not mean that inflation is magically going to go away, right? This is just a reaction on the future rate hikes in the United States. But the thing about that is that, I think I showed you the probability, well, the day of the FOMC meeting, I showed you the probabilities of a rate hike in the September 22nd meeting, right? It was 3%, I think. And now, of course, it's 100%, right? And, it really doesn't matter if the Fed hinted that they were going to hike interest rates because inflation is already here, and the inflation rate in the United States last month was about 5%, but I think that the real inflation rate is about 13%. So inflation is already here, and the Fed hinting that they're going to hike rates in the future really doesn't fight the inflation that is already here, right? So to me, this is a little bit of an irrational move, but again, you have to trade what you see, and the markets can remain irrational longer than we can remain solvent, right? So right now, gold is testing the daily lows and is breaking the daily lows at the moment. So do you have anything that you want me to go through? Maybe we can actually go through the US dollar Japanese yen, right? Someone asked me about the US dollar Japanese yen. Well, yesterday we had a possible buy on the US dollar Japanese yen. If you remember, the rationale of that trade. This is the hourly chart. No. The rationale of that trade was after that big move to the upside, price was chopping around here, forming what seemed to be a flag, right? So we had our buy stops above the daily highs, and this is why we use buy stops and sell stops, because price dropped, of course, below our stop loss, but we didn't get triggered. Now today there was, I didn't see any setup at all to buy into this weakness. Maybe we could have buy at the 109.85 or 109.80, but there was no setup. The US dollar Canadian dollar, we are going to delete that pending order. The rationale, if you remember, I have been talking about wanting to sell into some strength here on the US dollar Canadian dollar, which basically means selling Canadian dollars, right? And I've been wanting to sell Canadian dollars for a while, but I didn't see a deep pullback or a pullback deep enough for me to get involved. Now, my sell zone was the 124 level. Again, But right now, price is completely rallying, so we are going to delete that order. The setup, the actual setup on this trade was this, the break of that very steep structure at the break of today's lows, with stop losses above around the 124 level, if I'm not mistaken, right? But price did not. Price continued to rally inside of this structure, so we are going to delete that order. What else? Let's see if we can have a look at the Nasdaq. Yesterday, I took a buy on the Nasdaq right here, and I took profits right here. That was a great trade, actually, right at the open. And I took right here about 75% of my trade, and then by the end of the day, I just took it all out right here. Right now, we could look for buys at the retest of yesterday's. No, this is not yesterday's. This is Wednesday's highs, but really, I'm not looking into another buy on the Nasdaq. This was my setup on the Nasdaq. Pretty simple. Retest of the previous broken level right at the weekly pivot. A retest of the bullish structure, the 161.8 of the last leg up, etc. So the US got pending. Yeah, we're going to delete that order. Actually, I'm going to send that right now, because the US dollar is still rallying. Sell stop, right? Let's see if we can find something. All right, let's look at GBP USD. So the GBP USD is completely crashing, right? So just give me a second, and let's have a look at the daily, right? This level was, after if you remember, we got into a few buys right here at the bottom of this range, and my next level was the 140, but price completely broke with it. And right now I'm not so sure if I'm going to be looking for longs on the pound versus the US dollar, or the pound versus the yen, for that matter. It depends on how today closes, right? And I reckon it's going to close quite bearish. So what we're going to do is we're going to wait for price to stabilize around the 138.40 or so, maybe to look for buys here, right? And if price breaks with these lows, then we're going to look for sales, right? Let's have a look at the 4-hour chart. Same story, the 4-hour chart, right? Are you in Andy? Are you in a GBP USD position right now? Send good signals, profitable. That's the whole point of what we do, man. Right. So the 138.20 or these lows is my next key level on the pound versus the US dollar, around the 138, right? Around the 138. That's the level that I'm looking at. For the time being, price is in the middle of nowhere. I'm not looking to buy or sell right now. So the US dollar, Canadian dollar, we could still get a sell opportunity here. Just have a look at the long-term structure All right, let's go to the 8-hour chart. Yeah, we are retesting right now a very strong long-term, very structured. But I mean, price is really, the US dollar is really, really strong at the moment. It's the probabilities of a breakout are higher than the probabilities of a reversal. Having said that, we should also be looking at the next key level here on the US dollar CAD, which is about the 124.50. Yeah, I will, Antonio. I will. Yeah, you are completely right. I'll do that. All right. So, yeah, I just um, I just sent the delete message. Let's have a look at yeah, Bitcoin. Someone asked me about Bitcoin. So yeah, yesterday I got in a Bitcoin long, right? That I got stopped out at the retest um, of last week's highs, right? And the retest of the structure, etc., and the break of the short-term bearish structure, which was, of course, a bullish flag. This one right here. Right now, to me, Bitcoin is in the middle of nowhere again. Um, I'm not looking. I'm not looking to sell Bitcoin. I'm only looking to buy. But for the time being, price being below the 38,000 level, to me, there is no setup to buy. Even if we go down to retest the 36,000 level, I'm not sure that I would be buying into that weakness. What I would really want is price to break with today's highs, to break with these lows right here and retest them. So I get a very nice risk to reward to um, uh, to a rally for the retest of the 42,000 level. Yeah, I can check the DAX for you, of course. Wow, I didn't see that. That's a big, 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 big move on the DAX. That's a 1.81% move today. Wow. I don't know, Godfrey. I don't know if VIP Crypto has a long open on Bitcoin. Uh, I am not the trader of that group. Wow, I didn't see this DAX move to the downside. Right, let's have a look at what's going on here. Um, all right, so is anyone on a DAX short at the moment? All right. No. You want to sell? Why would you want to sell the DAX at the very lows after this big move, right? That's just FOMO and that's just chasing the move. Uh, that's um, that's not a very profitable trade idea. GD, I am I don't know. Like I said, I am not a trader of the crypto group. The DAX, you know, let's see if we can find some structure. This is the thing about the DAX, right? It has been rallying for a while, but in a very choppy manner, right? There is absolutely no structure for me to get involved on this market. Let's have a look at the forward chart. I'll show you. So yeah, I mean, there's absolutely no structure right now in this market for me to get involved in, right? It's not like this, yesterday's buy on the Nasdaq. This is a beautiful buy, right? This is a slam dunk long. So on the DAX, I don't see this kind of structure that is going to give me a high probability trade. I mean, but if you want to talk levels, I mean, the 15400 to 15430 level should be the level to look for longs, in my opinion. But I wouldn't get involved. I'm not going to get involved in this, or I'm not gonna deep buy the DAX. I just don't like the price action on this market. Same thing with the FTSE. Even though the FTSE actually was trading inside of a kind of a structure, right? But again, there is no levels to me to get involved in right now. And let's have a look at U.S. equities, because we are trading the U.S. market. The S&P 500 is down almost 1%. The Dow is down 1.2%, and the Nasdaq is down 0.66%. Right. So let's have a look at the S&P 500 on the 4-hour chart. So the next, I'm sorry, my throat is killing me. I'm sorry, guys. The next key level that I see on the S&P 500 is the 4170 level, right? I'm definitely not going to get involved in a long position here, just because it's Friday, right? And when and if price hits this level, it's going to be in the afternoon, so I'm really not going to get involved in this. But having said that, right, if price doesn't break this level or these lows right here, this is the 8-hour chart. Let's go to the 4-hour chart. Okay, if price doesn't break these lows next week, this might be the level that we're going to look for longs. Again, I'm really not a fan, just because of the lack of structure in the market. The Dow is really crashing. Yeah, the Dow is really crashing. So wow. Okay, this is a good thing. If the Dow breaks with this, wow, it's really tested the 33,400 level. Now, if the Dow breaks with these lows, I believe that we might enter at least a short-term bear market, right? Because just have a look at historic price action. This is the level that buyers enter this market to move, to pick price up all the way to, I think, all-time highs right here. And then when we had this big reversal, just have a look. This is how I look at the markets, right? This is how I find my key levels. After we hit all these highs, sellers took control of the market, right? And this was a from high to low, minus 5% move in 2 days, right? So this is a super bearish move. But what happened here? Sellers were unable to swipe all the buy orders that were in place here, and buyers took control of the market, right? So this is a mean reversal, and this is why this is a key level for me. And right now the Dow is breaking with that level. And in my opinion, right, if the Dow breaks, if the Dow breaks and really breaks, not fakes out, really breaks this level, or if today the Dow closes below this level, we are going to enter a at least a short-term bear market. And when I say a bear market, I'm just talking about further downside, because the next key level should be the 3280 level for about a 1.70% move to the downside. Hi Daniel, welcome mate. So, but that, I mean, it's going to be really hard for sellers to break through that level. Let's look at the hourly, right? Let's delete all the drawings that are no longer in play, and let's put a line. Really, hold on. I'm gonna put a line on the week low and at the bottom of the candles bodies, right? So right now we are retesting this massive key level. It's also a psychological round number 33,400. Now this is CFDs. This is a CFD chart, so we don't have any volume on it. We could look at the futures chart, you know, the E-mini Dow futures, but I don't have the data for it, so I have that delayed data, so it really wouldn't matter. But if you are a Dow trader, this is the level to be very attentive of, you know, because I mean, even if today price rejects this level, I wouldn't get involved on a buy. Why? Because it's very plausible that it's going to be late in the morning, or the beginning of the afternoon, etc. It's a Friday, so I wouldn't get involved on a buy. But if today closes, I mean, let's just imagine that today closes above the daily highs. That to me would be a signal to look for buys on Monday, right? If price is unable to break with the 33,400 level, but closes around the 33,500 level, I mean, I wouldn't be so hard to look for buys in the Dow. I'm sorry for my voice, guys. I really have a massive sore throat. So if I sound like like a robot, it's my microphone. The S&P 500, we already did that. The Nasdaq is a different story. You know, this is a cool level, and you know, yesterday I had my first targets at these highs, but when I saw the close of this 4-hour candle, I decided to move my first targets all the way to the 14,100 level, just because this move was so strong. Well, today, I mean, there could have been the idea of taking a long at the 14,075 level or so, but to me that was quite speculative, and I already had closed all my longs, so but the thing about this is that, I mean, if price comes down and retest again the 13,900 level, which is the level that I took that buy yesterday from, you know, this very structured move would break, and I mean, just because this structure is holding so nicely, if price comes down and retests, let's call it the 13,900 level, right? It would break with this very nice structure, and you know, the now longs wouldn't have the same high probability of success. And also we're trading all-time highs, so that's very hard, right? Because we don't, I mean, it's very hard to target all-time highs, right? What I do is I use fib extensions to get out the 161.8. So let's have a look at metals, right? Yeah, hold on just a second. Again, let's have a look at metals. Gold is retesting today's lows, and it continues to find buyers at today's lows, which is very nice. So let's have a look at the daily in gold. Okay. I'm going to delete all of the drawings and I'm going to redraw everything. Okay. So this move, this pullback, let's call it a pullback, right? This bearish move right here. It's I think it's about a 61.8% pullback. Let's have a look. Just to be very accurate with it, right? It's exactly a 61.8 pullback to a very, very thick area, right? Now, I'm not making a point for longs at the moment for you guys, but let's go back in historic price action and let's have a look at this exact level, the 1770 level, right? So if we go back in historic price action, the 1770 level, you can see that it is again where we saw a mean reversal. So this is a massive key level for me. And if we go even further in price action, right here, okay, I mean, I know that you cannot see it, but this is, I mean, just have a look, right? This is the level. I mean, levels are zones. They're not straight lines, right? So this is the level that was capping the upside of a very, very strong move to the upside, right? And then price started to print that flat triangle that eventually broke to the upside. Okay, price broke, retested that level, and then we saw buyers jumping heavily to push price all the way up to all-time highs. From this level to all-time highs, we're talking about a 17% move. That's huge. That is massive. That is massive. So again, we hit all-time highs, then price retraced back to the same level on a super bearish move. And what happened here is that we had a mean reversal. Just give me a second, please. I'm going to go. I'm going to drink some water. Right. So this is where we got that mean reversal. Then price broke to the downside, and what happened after we printed that double bottom around the 1681 level? What happened is that we eventually broke to the upside, and then here is where we saw buyers jump in again. And right now we are retesting this exact same level, right? So this is a level to keep an eye on, right? This is a level to keep an eye on for next week. Let's see how gold closes today. Let's have a look at the 4-hour chart, right? The 4-hour chart, the 4-hour chart, I mean, right now, price is in the middle of nowhere, right? There was a big, earlier today there was a big volume being traded around these levels. But again, we are still printing that very strong bullish divergence on my oscillator, right? On the hourly price just broke with today's lows and is retesting yesterday's lows. Okay, so right now there's a little bit to do in metals. You know, we are retesting this very important, let's call it, short-term level. But again, we remain very much looking for that reversal, because I'm still very much bullish metals, and I will be unless we break with this double bottom that we printed back in the beginning of March and the beginning of March and the end of March. Until then, if price breaks with the 1717 level and April 29th lows, it's very plausible that we're going to be retesting the 1720, right? But that's a big if. Let's have a look at silver. Silver, same story, silver, same story. Retesting a very strong level. But I am still looking for longs in silver. Did you guys have a look at my daily watch list when I talk about silver and the multi-year breakout that I'm waiting for? Well, if you haven't, I'm gonna show you, right? So this is silver. Let's go to a 2-week chart, and all-time highs about at $50 per ounce, and I am looking for this multi-year breakout. Why am I looking for this multi-year breakout? Right now it doesn't look very hot, I know, but if this scenario plays out, the possibilities of a big push to the upside are about 25% to the next key level. And of course, if we are wishful thinking, about 45.8% to the other key level. But to me, this is still a flat triangle in the sense that we are making, or price is making higher lows, and flat tops, right? So this still is a continuation pattern on the 2-week chart. Yeah, I know it's crazy, but if this scenario plays out, this breakout could be a massive breakout. Silver right now is rejecting yesterday's lows and today's new lows, of course. But let's just wait and see. Do you have any questions? Do you want me to look at something? I'm sorry about my voice, but my throat is killing me. Let's have a look. Whoa, the Dow is clearly breaking with that level. This is going to be a very bearish day if the Dow breaks with these lows. Just have a look at the daily. Wow, that no, this is the 2-week chart. I'm sorry. Let's go back to the daily. Yeah, it looks even it looks even more bearish on the weekly chart, right? This candle just engulfed the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks worth of price action. No, not allergy. It rained a lot here yesterday, and I had to run to my car under the rain, and yeah, that's what happened. Yes, I can have a look at the S&P 500. So the S&P 500. Let's have a look at the daily chart first, shall we? So the daily chart on the S&P 500, right? Um, this is the key level that I'm looking on the daily, the 4 hour, the hourly, same key level. Actually, I'm going to change the color on that one to a green right here. So yeah, basically, the reason that I'm looking at this key level is because we had, I mean, this is where sellers were positioned, and then when we broke with that key level, this is where buyers jumped in, right? And right now we are retesting these lows, the same lows. If we look at the 4 hour chart, right? Well, right now we are rejecting that same key level, which is good for bulls, right? Because if sellers are strong enough to swipe all the buy orders that are placed here, the next level that I really see buyers jumping in should be yeah, exactly. Should be the 4120 level. So if sellers manage to break or to swipe all those sell orders, we could be looking at a possible 1.39% move to the downside. So heads up to that. But right now, let's have a look at the hourly. Right now, it seems that buyers took control of, or at least the very short term. But you can never know for sure, right? You can never know for sure. And to me, this hourly candle says absolutely nothing, right? Even if this hourly candle closes above its high, its current high, I'm sorry, or above, I mean, if it closes above yesterday's highs, that would be kind of a sign. But I mean, I'm not too hot to take a long position in U.S. equities at the moment. Are you looking to buy? Yeah, sure. I can take a look another look at the pound yen, at the pound U.S. dollar. Give me a second, please. Right, just a second. Okay, cool. I'm sorry. So, what do you want me to look at the pound U.S. dollar? I mean, it's basically the same at the same price level that we just look at. Um, what are you looking to do with the pound USD? Right. So the pound US dollar. It all depends how it closes today and how it opens on Sunday. But to me, this I mean, this doesn't look very bullish. If you look from high to low, right here, we're talking about a 2.2% move in what? In 2 days. That's a big move. Um, yeah, let's have a look at the US dollar Swiss franc. This is a market that I don't trade, but I can have a look for you. Of course, mates. Of course. That was a big rally. And you know what? I mean, levels. That's why I love trading levels. Key levels is where you're going to find the high probability trades. Always. Just have a look at this. This massive key level of the daily is where we had that reversal on the US dollar versus the Swiss franc. Of course, that this was FOMC driven, US dollar driven, but I mean, structures and levels do matter in trading. So right now, there's absolutely nothing to do here, right? We are retesting a very big level on the daily. But to me, there's absolutely nothing to do here but to wait. I mean, in all US dollar pairs, there's absolutely nothing to do but wait for the pullback to buy into that weakness to get in on a with the current trend, which is bullish on the USD, right? Having said that, let's have a look at where could that be on the US dollar Swiss franc. Well, to me, on the US dollar Swiss franc should be, I mean, this is such a this would be such a shallow pullback to the 91.90 level that I mean, I wouldn't be too happy to get involved in a long here. Like I said, this is a market that I don't follow, but and if price reverses and breaks below and trades below the 92, 91, 90 level, well, that could bring some bearish pressure, and the ideal long trade to me would be the 90, the 90.95, 91 level around these lows. But that, I mean, that is a big if, because the US dollar is so strong at the moment that to get a 133 pip reversal on a 260 pip move to the upside is going to be quite difficult. Yeah, the Aussie US dollar. Let's have a look at the Aussie US dollar. On the daily, the Aussie USD crashing. Right. So the Aussie USD, well, I mean, the Aussie USD just blew through that through the let's call it the make it or break it level for bulls. The next level that I see buyers get involved would be around the 74. 74 level. This is the daily chart, remember. So to me, this market is right now a sell. Actually, I'm going to do something. I'm going to put that level on all of my charts. Just give me a second. Oh, hold on. It's this one right here. Cool. So let's have a look at the 4-hour chart. The 4-hour chart, right? Again, a pullback to this level. I don't know. This pullback is so shallow that I really wouldn't be. I'm sorry. I wouldn't be too fond of trading the downside of it. But yeah, I mean, unless there is a mean reversal. I mean, a fake out. Or something like this, right? Price breaks above and starts trading above the 75.40 level, stabilizes around the 75.40 level, then I would consider looking for longs. But for the time being, the Aussie USD just blew through that big, massive make it or break it level. I'm sorry. All right, so guys, do you have any questions? We have been live for about 48 minutes, and I'm very happy to do this for you twice a week. I'm gonna try to start doing it more often, and not only focusing on charts, but also I would like to do some Q&A sessions, where we can talk about other things involved in trading, like back testing, the importance of back testing, the importance of understanding the math behind the trades, the importance of understanding fundamentals, how to look for good opportunities when fundamentals and technicals align, right? I'm gonna try to do that session, the first one, next week, maybe on Tuesday or Wednesday or so. All right. So I mean, if you and on that session, if you want to ask me anything trading related, life related, or anything at all, that would be the place to do it. How long the US dollar is still bullish? Well, that is the question, right? That is the fucking question. I don't know. No one knows. All right. So I'm sorry. Let's think about this for a while, right? So why is the US dollar bearish? The US dollar is bearish because right now we are in a massive round of quantitative easing, right? Quantitative. If you don't know what quantitative easing is, well, I'm sorry, my throat is killing me. Quantitative easing is when central banks start an asset purchasing program. What this means is that they start buying debt from commercial banks to inject liquidity into the economy, right? Why? Because printing new money has a very high inflationary pressure, right? Would have a very high inflationary pressure in the economy. So they still print money, but they do it very solidly. They buy debt from commercial banks to inject money into the economy. Why? Because the number one cause of recession is the lack of access to credit. Why? Because everybody lives beyond their means, right? This is a reality. Everybody believes beyond their means in the sense that no one, absolutely no one, lives with the money they make. They use credit to leverage themselves, right? This is fine. Everybody, I mean, this is the reality that we live in. But when liquidity dries up, banks restrict the access to those credit. So now people are not going to be able to pay for their livelihood. And then the snowball effect starts and recession starts, right? So to avoid this, and the reason that the banks restrict the access to credit is because they have to protect themselves, right? They have, they're not going to just lend money out because the economy is going to crash, right? They don't care about that. They care about profitability, and if they see that lending money or giving a credit to someone is risky, they're not going to do it. And when recession starts, the level of risky lending goes up, so they start giving less credits, right? So people start to not being able to afford their livelihood. Then the snowball effect continues, and then consumers are not consuming anymore, or consumers consume less because the fear of recession. I'm sorry, the fear of recession acts in the opposite direction, in the sense that you're not going to be spending money, like in Starbucks every single day when the future is uncertain, right? You're going to hold on to your cash. So businesses start losing business. They start making less money. They have to fire people. So people don't have income anymore, and then the snowball effect continues. That is where economy is crashing and the economy is going to recession. So central banks inject liquidity into commercial banks to avoid that credit trap, right? So basically, they buy national debt, because commercial banks have in their portfolio uh, government debt, T-notes, treasuries. So the central banks buy those treasuries from commercial banks. So banks are more liquid in scary moments, and they don't act uh, reprehensive towards their clients in the sense of giving less credits. So that's quantitative easing. So what happens is that when liquidity, uh, when central banks drive up liquidity, the price of a currency goes down, because you have to think about a currency as a commodity. The more US dollars are in circulation, the less valuable one single dollar in your wallet is, right? So that's why we are seeing this big crash on the US dollar, and that is why we are bearish on the US dollar, and that is why we are only looking for we were only looking for sales on the USD, right? But now that the Federal Reserve hinted a rate hike, two rate hikes by 2023, the US dollar started to rally. Okay, again, we are still in, technically speaking, we are still in a very bearish market in the USD, right? And in my opinion, unless we break with these highs, the bearish structure is still in play, even if we are seeing this big, massive bullish momentum in the US dollar. So if we break with the 93.40 level or so, this is where really we could see the US dollar pick up. And the probabilities of a rate hike in the September 22nd FOMC meeting is 100%. So we are expecting that rate hike, and of course that rate hike is pricing in the markets at the moment. Cool. That's also why oh boy, the Dow just move through that level. That's also why equities are crashing at the moment. Uh, yeah, so that's to answer your question though. How long is the U.S. dollar still going to be bullish? I don't know. No one knows. But the thing about this is that uh, it all depends, right? Right now, those rate hikes are pricing into the market, but we haven't had. I mean, the Fed hasn't even said that they were going to write hikes. They hinted that they were going to. Of course, that when they do that is actually them saying that they are going to. But by September 22nd, I could see little to no reaction to that rate hike if the U.S. dollar continues to rally, right? But how long the U.S. dollar is going to keep on rallying, I don't know. Why? Because also the Federal Reserve is maintaining their interest rates close to zero, and they are continuing with the same pace on their asset purchasing program, which means that they are going to continue with that printer printing money like crazy, which is very bearish for the currency, but also very bullish for equities. So right now these moves are quite irrational in my opinion. But again, there's nothing we can do. But trade what we see. And right now, I'm seeing a big rally on the US dollar. So next week, what we're going to do, we're going to look for pullbacks to buy into this strength. Unless something else happens, right? I don't know, Rinto. I don't know. That's the thing. I don't know. I mean, this is absolutely not a slow rise, right? Just have a look at this, right? This is a 3 days. In 3 days, the US dollar, hold on. In 3 days, the US dollar has moved 2% to the upside. Now it has erased all the losses of the past 2 months. So this is a massive move to the upside. So I mean, this is not. You're more than welcome, Rinto. This is not a slow rise. Again, levels matter in the market, and it's right now with this so strong move, it's very plausible that we're going to be looking at retest of the 93 level on the DXY, right? And this is going to be a very thick area for buyers. Again, I'm not saying that this is where the US dollar is going to reverse. I'm just saying that this is where we might see some struggle from buyers to continue with that rally. Now, if they have no problem breaking with the 93 level, well, my friends, then we are going to see this market spike up. Right, so that's me. If you don't have any questions, thank you for joining me. I'm going to do the Q&A session next week. So whatever you want to ask me, I'll I'll try to make it more. I'll maybe turn on my camera or so. But yeah, I mean, anything, not market related, but trading related, that Q&A session is not going to be, well, it's not going to, I mean, it's not going to be focused on charts, price action, trades, etc. It's going to be more of a conversation about trading psychology, discipline, etc. Whatever, and whatever questions you may have. Okay, so yeah, thank you for joining me, and have a great weekend, guys. Stay safe, and yeah, I'll see you next week. Cheers.